The recently concluded earnings season showed some signs of encouragement, and what has really happened is there have been a lot of analysts that have upgraded Indian equities in terms of their EPS estimate for 1 year forward. If you have a look at the Nifty, that has seen a 10% increase in its EPS estimate for 1 year forward basis since the beginning of this quarter, followed by the DAX that has seen an 8% revision in its EPS, and then you have the US indices S&P 500 along with the Dow Jones, which have also seen an increase of about 6 to 7% each, and then you have Asian indices like the Nikkei as well as the Taiwan and Hang Seng, along with the Kospi that have seen an increase of about 3 to 5% increase in their EPS estimates. Some of the countries that have seen an EPS downgrade since the beginning of this quarter would be Shanghai, which has seen a 1% decline. The FTSE 100 has also seen a 1% decline, and then you have Russia that has seen a decline of about 2%. But Brazil has seen the biggest downgrade in its EPS estimate on a 1 year forward basis by about 11% since the beginning of this quarter. What this actually also does is, make me look at how the market has been performing before these EPS upgrades started coming in. And as they say that the market is a forward-looking instrument, that is exactly why we have seen in the last 6 months that emerging markets have started rallying on various factors. And at the top of the list, you have India's S&P BSE Sensex index, which has given you returns of more than 30% in the last 6 months, followed by the Nasdaq as well as the Kospi, which have surged more than 25% each. And then you have Asian index Taiwan that has given you more than 20% return in the last 6 months. The Shanghai Nikkei as well as the S&P 500 along with the Dow Jones have managed to give you returns anywhere between 11% to 18% during the last 6 months. And if you have a look at the European indices, all of them have managed to return single digit. So you have the CAC that has given you 8%, the DAX has surged about 3.5%, and the FTSE 100 has surged just about 1% in the last 6 months. Now, all of this is on the back of some serious money that has been chasing, and especially the foreign investments that have been chasing the emerging markets of late. What really stands out over here is the fact that India is the only Asian country to receive FII inflow on a year-to-date basis. If you track the flows, India has received about $17 billion so far this year, with the fact that South Korea and Taiwan have seen an outflow of about $18 billion each from their country in the year 2020. Thailand has seen an outflow of more than $8 billion. Malaysia outflow of more than $5.5 billion, and then you have Indonesia and Philippines that have also seen an outflow of more than $2.5 billion so far this year. The other major factor that has contributed to the ranked outperformance that has been delivered by the emerging markets of late has been the fact that the dollar index has remained subdued. In fact, it did manage to close below the 91 handle and also trade at the lowest level that we've had in at least a couple of years. So all of these factors contributing well for emerging markets, and India really shining in that space.